Hey, good evening, traders. This is Trader Tim from eminimind.com. Today is December 14th, 2017, Thursday, and I wanted to highlight just some of the price action that occurred on Tuesday following the live trading session. Before we get to that, you can see the nice little pullback that we had today in the E-mini S&P. The trend line below us, a likely spot for the market to pull back to. And even if it pulls back all the way to the trend line, if we hold above this swing low, things would still be bullish, and I would look for a bounce. We can draw up the next retracement. That's a 2649. But if we draw up the previous one here, low to high, so we've got this daily long 2607s. It has not reached its target. But in the meantime, the next daily from low to high, it had failed. It had dipped below its 61.8. And so I anticipate that same thing happening with this one, or at least the possibility is higher because we've already seen that until we reach the 2682 and close this, reach the target from the 2607s up to 82s. These dailies that have occurred kind of in the middle of this has not been so great. So not putting a lot of weight on the 2650 other than the fact that it's a round number. Tomorrow is expiration, and we'll be off into a new contract. Well, the December contract will go away completely, and then more volume, all the volume will, those traders will then be forced to trade the March contract. So always a good week following the expiration, and it's really the last trading week of the year. We've got the 18th to the 22nd, and then Christmas holiday markets close. 26th to the 29th will be very slow, and then markets close again on the 1st and reopen on the 2nd. And from the 2nd to the 5th, that should be pretty light volume as well. So let's take a look at Tuesday and the price action that we saw from the trade that we took long in the morning. So Tuesday started off very horizontal. We had a very defined range, which is helpful. I like to wait those first 15 minutes to let some of the, let a range establish itself. And where my cursor is to the left to that dotted vertical line, that's the first 15 minutes. And we established a high, a low. We got a triple bottom down here and almost a retest of highs. Once we broke highs, we really went into a nice clean series of moves. We had a couple things going on with the nicey tick, and we had a very, very small long setup that you could have taken. I did not. It was very small, and at the time the market was very showing signs of a lot more range-bound activity, and we did see that for the next 20, 30 minutes or so, but it was a valid setup nonetheless. Very tiny setup down here. We broke the swing high and then pulled back to the 50% retracement. So no big deal though if you passed on that one or missed that setup. I like to wait for a break outside of that range, a break outside of the first 30-minute range. So a couple of things. You can draw up from that swing low to the next high and use that as an entry, or doing all the way halfway back from lows to the highs once we broke out of the 30-minute range and pulled back to the 50% of the trading hours only, low to high. It was also a valid setup. And then from there, we went low to high, pulled back to the 50, and then really continued on. Now, one thing I wanted to use this next setup as an example, when we draw a low to high, we can see that the market does not pull back all the way to the 50. And this pullback here, you wouldn't really draw up the next setup yet because we didn't reach the target. Now you could draw up the setup and 6 ticks still keeps you in the trade, getting long at the 50. But ideally, you're getting long here at 65s or close to 65s, either on this test or in the room we were back at closer to 8 o'clock on the first test. And ideally, you're trailing your stop on the way up. So the market makes a new high, pulls back, and then makes another new high. And you're just trailing your stop on the way up as opposed to getting in and out on every single trade. But in this case, if I wasn't in a trade and we were right here on the day and I were to draw from lows to highs, and I noticed that, okay, well, we do have this swing low up here, and I draw that setup too. Well, they're so close to each other, I just put my order in front of the 50% that's a little bit higher, because 6 ticks is still going to keep you in the trade. A 69.25, your stop is still going to be down below 68s. So that way you don't miss the setup by using the little bit lower anchor point. And then the next setup, again, a little bit dirty, meaning it dips into the 61.8, but traded up to its negative 23% target. And then it was at that point that the market broke the previous swing lows. And if you're trailing trailing swing lows on the way up, that's going to keep you in the trade much longer, and then you can just make one trade and trail your stop, take half of the position off at the negative 23% target and trail your stop on the way up, so you're not opening up a new risk, a new max risk every single trade. And I found that to be much more profitable over the long term, trying to get in a setup early and trailing, trying to stay in that setup as long as possible. So I hope you find that helpful. Want to wish everyone a happy holidays. We'll be doing another live trading session this Tuesday on the 19th, and you can check that out at emoneymind.com/VIP. I hope you have a great weekend, and we'll talk to you soon.